Yeah. Unmute yourself. Okay. Good morning, everybody. Good morning. My name is Eniola Latinji from Business Day. Welcome to Millennials Hangout for the month of August. Our topic last month we 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 had this session and we spoke about and skills acquisition and technological trends. Today, we'll be talking about investment opportunities for millennials, and we have wonderful speakers today that would be talking to us on investments and different investment plans and answering all of our questions on investments. So I'll be introducing our guest speakers today, and they'll just give us a brief talk on their views on the topic at hand. We have Brenna Osi-Emi, she's the CEO, Z-Crest Investment Management. We have Iberi Hahotu, is the Senior Product Management for. So we have Anike Brimo, Ed Private Wealth for Cordless Asset Management. And we have Rotimi Adejola from is the Ed Wealth Management Credit Bureau. So Brenna, I would like you to start and just give us your opinions on and view on investment opportunities for millennials. Good morning, Brenna.
Good morning. Can you see and hear me?
Yes, I can see you.
Because Nigeria is happening, so I have my backup, Wi-Fi if anything. Thanks for having me, Eniola. Thanks everyone. Good morning. My name is Rena. And just to open, I think for me, right, we're talking about investment opportunities for millennials. I'm a millennial, even though some people think I'm Gen Z. Just kidding, but yes, I think the first investment should be in yourself. I know that we're here to talk about like investment opportunities in our landscape and whatnot, but I think beyond anything, first and foremost is investment in yourself, right? I read something earlier this week, or was it last week? And there's this guy I follow on Instagram, and he says, right, rather than before you invest in S&P 500, invest in the S&E 500, right? Mm-hmm. And I found it very interesting because right at this point, right, it's not only about how hard we work. We get paid, whether in 9 to 5 or whether in our business, by how much value we are giving. And you can only, give value if you have it. And you can only have value if you're learning, if you're building a skill that will help you increase your earning potential, that will help you give value to increase your earning potential. So, I just wanted to put that out there first, especially because we're in a new economy, we're in a digital economy. There's so much to learn. There's so much information and can be overwhelming, yes, but it's important to learn, and build up our skills, So I would say that will be first, because that will then help you increase your earning potential and have the money to invest in the first place, increase, the kind of amount of money that you have to invest. But also, even if you wanted to start a business, it will help you build the skills to start a side hustle or a main hustle that will then help you understand the business. But then also, also learning and investing yourself means that you are investing, even when you have monies to invest, say, in a fixed deposit or a treasury bill, which I'll come to, you have to learn about it as well, because you must understand what you're investing in. Do you see? And you don't have to totally be an expert, but the same way that if you wanted to start a business, you would say, oh, what am I interested in? I want to sell hair. Where are they selling the hair? Is it Vietnam? I'm seeing people in China. Some people say, you know, Peruvian hair, all of those things, right? I would want to know, one, what kind of hairs people like. I would take a poll. I would find out where to buy the best hairs at a good enough price, right? And I would think about my pricing. And I have this great product, but where am I? What's broad now? How do people know about it? You know, so I also still need to build the skill around marketing it, right? And it's the same approach we need to take even in investing, right? In traditional or alternative assets. It is understanding what is the utility of the assets I'm investing in, right? What does it do? How these people that have come to me now, how are they making the returns? Does it make sense? Right. And if I can't become an expert, and I'm not asking anyone to become an expert in that field, I mean, that's why all of us are here, right? Yeah, it is to speak to an expert so that you can understand the basic, but you know, that's what I would say for investment opportunity. I mean, the opportunities are a lot, right? And I mean, I would definitely be speaking about traditional, which is pretty much most of what we do would be fixed deposits. You have money sitting idle. Please do not let that happen again after today. Thank you. But you can fix your money, put your money in a fixed deposit in a mutual fund. There's treasury bills, even though the rates are not, fantastic these days. For retirees, for instance, I usually tell them, understand their unique circumstance and say, put some money in a bond because it would help with your cash flows, over time, right? Because you're not active in active service anymore. And then obviously dollar deposits, dollar investments, because you also want to hedge against devaluation, right? What else? There's local equities, so investing in the local company, in the GT Bank and an Access Bank in Nigerian breweries and so on, you can buy those stocks. But even now, especially because of technology, the average person has access to even global stocks, right? So you can be a part of, can buy Netflix, you can buy Coca-Cola, you can buy Google stocks, so there's so much. But I think more important or equally important is in deciding what you want to invest in is best to understand your own unique circumstance. What outcomes are you looking for? Because it's not just about the products. It's about those products, what kind of solutions are they solving your own unique circumstance or your own problems? Because it's not about the product, like I said. We are all in different unique circumstances. Somebody's trying to save for retirement. Another person is trying to save to Japa. Another person is trying to save for a car, right? And so, you need to know your unique circumstance, and then those products will, and advice, obviously, from us would help you meet those goals. I mean, I'll stop here because there's so much to say, and let me not say everything. Thank you.
Thank you so much. Thank you so much, Rena. So while I was introducing my guest, because I did not mention what a barrier has. So I just said he was a senior product manager. So a barrier, please, when you're I'm very sorry, but please can you introduce yourself when you're about to start? So a barrier, please just tell us what your view about millennial investment is, what opportunities lie for them. Because I know like millennials are past like the Gen Z age. And maybe they might feel like, oh, they've not started early and all of that. So like, I think that it is important for us to know that it's never too late to start, and you can start at any point. So Perry, over to you. Please introduce yourself too and tell us what you do and what you have for us today. Thank you.
Thank you. Hi, Yaniola. Just to confirm, you can hear me?
I can hear you.
Oh, okay, great. Thanks for having me. And you're forgiven for not introducing me correctly. but that's fine. That's fine. So just to start off, I think Rena has said a lot, and she's right on point. I mean, starting from the point you mentioned about millennials thinking maybe they didn't start on time, and they don't have enough time to start building up on their investment. There's really no. I think that if you didn't start investing yesterday, the next best time to start investing is today. There's really no need to wait any longer. You start off and you start investing and you start building up your portfolio. But just to introduce myself, my name is Ebere. the senior product manager for VBank, VFD Microfinance Bank. And we're a licensed microfinance bank by the CBN, also backed by NDIC. And just like every other bank, we perform banking activities around transactions, investments, helping people to grow their wealth, and also allowing people to have access to their account and manage their businesses. Coming down to the topic of investments by millennials, I mean, there is a whole lot to talk about in this space. When you even talk about the new kind of investments coming up, that's aside the traditional investments that we all know about. When you talk about the new kind of investments that are coming up, there are actually a whole lot. And if you're not very careful, you might get lost in the midst of all the noise and information and confusion. So it's really very important that you understand what you're getting into before you fully commit your funds to it. So when it comes to investment, I have a few things I look out for, and I always advise my clients to look out for. Number one is to totally, if not totally, but have a good understanding of what you're investing in. Know about the risks of the investment, know about the rewards on the investment. Part of what this helps you to do is to weigh your risk. We have different risk appetites as individuals, even as organizations. We have different risk appetites. So you might be a low risk person, I might be a high risk person. The kind of investment that I would generally go into might not be the same kind of investment you might want to go into. So it's important you don't invest based on what every other person is doing. It's important you understand what you're trying to invest in, weigh the risks and the reward. And then after that, you can then make an informed decision of how to even go into it in the first place. The second thing is to have an exit strategy. It's important to have an exit strategy. We're all investing to make money. But again, if you understand what you're investing in, which is the first point, it now becomes better or easier for you to have an exit strategy, just in case. Investment is about managing risks, not avoiding risks. So what that essentially says is you don't eliminate risk. You can't eliminate risk 100%. There's always an element of risk in whatever investment you're making. So it's a good way to understand it, and then try and have an exit strategy, just that suits you, just in case you decide to pull out at any point in time. The third point, which I would like to talk about, is find a mentor. It's good and fine that you read up on it, to try and understand it, but nothing beats on ground experience. That's how people learn to do business, or even people learn to, your mechanic on the roadside, or the handymen that do one particular job for you or the other. How they learn to do those work or those jobs is to actually understudy somebody that has been in the field for a while. So it's very important you find a mentor. No matter how much you read and how much you research, there might be some things that you might not actually come about that real experience will be able to explain to you that you won't find in your research or in your reading. So it's always important to find a mentor, somebody that is in the field or in the investment you're trying to get into. Understudy the person, talk to the person, get some sort of knowledge or information from the person, and then based off of this, again, you make your decision on how to enter the investment. Then lastly, this is something that is personal to me, which is also how I invest most of the time, is to invest for the long term. Invest for the long term. And by long term, I don't really mean 10 years, 20 years, 15 years. I mean, maybe 1 year, 2 years, 3 years. Ordinarily, personally, I wouldn't really invest in things that might be below 1 year for personal reasons and from past experiences as well. So I think tangible investments take time to mature and actually take time, a lot of times, to give you the kind of rewards that make sense. And a lot of times people get burnt when they start chasing quick wins when it comes to investments. When you try to put in money today, the next day you're making 30% or 50% or 100% in 1 week or 2 weeks. That's usually a recipe for disaster. It's important to, even if there are investments like that sound legit, look at it very well, analyze it, find people that are there, know exactly how the returns are going to come. It's not just knowing how to put in your money. know how the investment or the business is meant to pay back interest or returns on your investment. So again, just to reiterate, avoid quick wins. Some of them are legit, but a lot of the quick wins or quick investment schemes are usually where people get burned. So I would usually advise, extend your investment to maybe a long-term investment, and based off of that, then wait for the rewards to come. In terms of the particular investment types you can plug into, or anybody can plug into, especially millennials, I think Rena mentioned a couple of them, which revolves around things like fixed deposits, mutual funds, treasury bills, dollar investments, and all. Which are good. These are safe, trusted, and they've been validated over years. People have done them in the past and can attest to the fact that they actually pay returns, even if the returns are not as good as they used to be. But these are safe and secure investments. There are also the newer types of investments, which we might get into a bit later. But the bottom line for me when it comes to investment is to invest in tangible things and understand how the returns are going to come back to you, not just how to put in your money, and avoid chasing quick wins or big returns when it comes to investment. Try and build it out, extend it. There's never really a bad time to start an investment. Like I mentioned, if you didn't start yesterday, today is the next best time to start investing as a millennial. And you can never tell how good that plays out. Just to round up on this intro, at VBank, we have a lot of these services, a lot of these investment vehicles, and we also have professionals and experts that can walk you through, even explain how it works as it starts, and then walk you through the process and handhold you through this whole process of investing and ensuring you get tangible returns on the investment. So thanks, Enola. That's the intro for me.
Thank you, Ebere. Thank you, Ebere. So, like while preparing, I was going to ask like all of the guest speakers to talk on their investment philosophy. And I think so far, you've all tried to mention like what works for you and how, like, Brenna said the same thing, and you've also said the same thing. So I'll come back I have questions for you, but we'll come back to that. So next I'll be the next speaker to Anike Barmo. She is the head of private wealth at Cordless Asset Management Limited, and she'll be telling us what our investment philosophy is and our takes for millennials. Yes, so Anike, thank you for coming. We'd like to hear what you have to say to our millennials on investment. Thank you.
Thank you very much, Eniola. Thank you. I'm glad to be here. Just like you said, my name is Anike Braimo. I head the private wealth department of Cordless Asset Management. Cordless Asset Management is a company that is regulated by the Securities and Exchange Commission of Nigeria. And we've been in business for 15 years. We're actually 15 years this month. So we're a reputable brand. We understand the market and we understand what we're doing. We have other subsidiaries as well. We have Cordless Trustees, we have Cordless Registrar, we have Cordless Securities, investment banking, and insurance brokers. So it's your one-stop shop for all your financial service needs. Once you come to us, you can be sure that you can get all your financial service needs, in one stop. All right, so for me, talking about millennials and investment opportunities, I'd like to start by saying that, just like what Rena said and what Iberi said, you have to understand that for you to start an investment, you need to prepare a budget, So if you're earning an income or if you're getting some, for some form of salary or some form of savings from maybe family or investments, you have to prepare a budget and know what you want to set aside for investments and what you want to set aside for, other spendings. And then after that, you also have to understand what your objective is. Some people's objective is to invest towards a future project. Some people want to invest towards getting a regular return, and some people are just looking for growth. And so once you're able to understand your objective, You're able to know which kind of investment vehicle you want to jump on. Is it a growth investment or an income investment? Another thing you have to understand when you're looking towards making a decision about investing is your risk appetite. Are you an aggressive investor? You know, if you're an aggressive investor, then definitely you'll be making a lot of bullish decisions. You might like to go into equities. But if you're more bearish, you know, and your risk appetite is quite low, then you'll be looking at safer, more regulated and, you know, lower risk investment opportunities. So you have to understand what your risk appetite is in order to make the right decision. Define your time horizon. What's your time horizon like? Are you going into an investment for the long term or for the short term? Do you plan to invest towards maybe your children's school fees in about 10 years to come? Are you investing to make to be able to purchase a vehicle or to purchase a house? You know, so once you're able to determine your time horizon, it gives you an insight into what kind of investment, you know, you're looking at. Later on in the presentation, I'll speak to you about some of the products that we have at Cordless Asset Management that can help you achieve your goals based on your time horizon, risk appetite, and objectives. Another thing you need to understand is there are different investment vehicles. You know, if you're looking at equities, if you're big on equities, then you can go with equities. If you're big on maybe fixed income securities, then you can go with that. And if you know you want to just stay and play in the money market space, then you can also do that. So you have to understand which investment vehicle you'd like to hop on. And lastly, some people are of the opinion that, you know, once you invest, you just leave it and let it go. No, you have to service your investments. You know, you have to ensure that you're constantly possibly looking at it, you know, adding to it, and not just investing and letting it just, you know, stay fallow. And so those are the, that's my introduction for now. Later on, I'll speak to you about some of the products that we have at Cordless Asset Management that can help you achieve your dreams in terms of investment. Thank you.
Thank you so much, Anike. I think I've not mentioned enough. If you have questions like you want to ask our guest speakers, please send it to the chat box. Please send it to us. We'll be more than willing. They'll be all more than willing to answer these questions. So far, from what all of my wonderful guest speakers have said, they mentioned that you have to have a plan. You have to have do due diligence on like what you're trying to invest in. You have to know if it's long term or short term and all of that. So next I'll be calling on Mr. Rotimi Adejola. He's the head of wealth management at Creditview. He will be speaking to us on what his investment philosophy is and also what advice he has for millennials on investments. Good morning, Mr. Rotimi.
Yeah, good morning. Good morning. Thanks for having me. Yeah, good morning to other member of the panel. So yeah, my name is Rotimi Adejola once again. I am the head of wealth management at Creditview Group. So first of all, and Creditview is a finance group, you know, registered in Nigeria, you know, and we're headquartered in Lagos, and we commenced operations since 2013, and the business has, you know, have grown its presence nationwide, and we have a robust and ever-growing, you know, customer base in financing, consisting of, you know, six subsidiaries, you know, operating across 8 branches in Nigeria. So, and you know, we are reaching, you know, human capital structure, you know, with hands-on experience, you know, so that's about Creditview. So we deal with loan, lease, and investment. So that's about Creditview. So talking about my philosophy about investment, you know, and my own philosophy, you know, I think Ebere mentioned it's just about, you know, investing in, don't invest in what you don't understand. You know, it's very, very important, especially for millennials, because, you know, millennials are driven, they're mostly driven by returns most of the time. And you know, and look, I mean, focusing much on return, make you lose sight of the risk involved. So, you know, and let me even talk about who millennials are in the general behavior of millennials. So millennials they are people who are upcoming. They stand a chance of, because they are upcoming, so they stand a chance of, inheriting wealth, from the generation before them. They are kind of people that like liquid investments, accessible investments. So they also like, technologically driven products, So I would like to talk about, how you can, other people have talked about, the kind of investment you can invest, the long term, the short term, the medium term, and all that. So, and I would like to, just touch on how you can, create your investment and portfolio. So the very first thing you do, before investing is to, first of all, cultivate a healthy savings habit, because it's very, very important. Because if you want to invest and you don't have a savings habit, it becomes a challenge. It becomes a struggle for you because you keep, procrastinating. So if you earn 100,000, you can just bear in mind, let me set 10,000 aside every month. Whatever happens, come what may, come rain, come sunshine, the money is still, it's not mine. That's the first thing you have to do. Secondly, you need to build a financial, cushion that will help, soften the blows of
Mr. Rotimi, can we hear him? I just want to be sure it's not from my.
No, we can't. I think it's.
Oh, no.
I can't tell him as well.
Oh, okay. I think he's back.
in cash, to cover basic things.
Mr. Rotimi, sorry. I think your video stopped playing at some point.
So, oh.
Yes.
Okay, so you lost me at some point. Can you hear me now?
Yes.
Hello, can you hear me now?
You were talking about setting a financial cushion. I think that's where we lost him.
Oh, so sorry. Okay, so I was talking about, and talking about before investing, the first thing I talk about, and cultivating a savings habits. I think, did you hear that?
Yes, we did.
Can you see? Okay, good. Okay, so I was talking about building a financial cushion, that will help soften the blow. Should you have a situation whereby your cash flow change, whether because of a job loss, whether because of unexpected expenses, So that's why the essence of saving is for you, because theoretically people have mentioned that you need to have at least between 3 to 6 months of living expense, in cash, set aside that will be able to cover your regular expense like food, utilities, loan, repayment, and all of that. So, and also you have to also, classify your investments, with, and in, for millennials, it's very, very important that you have several investments and, classification like into 3, long term, medium term, short term buckets, in different buckets. So that I will stop there. So I think so as to save our time for further question. Can you hear me? Am I still here?
Yes, we can hear you. Eniola?
Oh, good. Okay.
I think she's out for a bit. Eniola, can you hear us? Okay. So what do we do next? Do we go? Let me see. While we're waiting for Eniola, someone has asked the question, what is your take on investing in cryptographic assets? Does anyone want to take that question? So I imagine they're talking about cryptocurrencies. Is this something you understand?
Okay, so, okay, yeah. So let me try and make an attempt, because crypto and crypto assets is a very dicey area, and some people have cleaned out in this area. A lot of people have also gotten their fingers burnt in this area, especially in recent time where the value has been declining continuously and it's fluctuating. Goes up, goes down, but generally on a downward trend. Again, my challenge with investing in crypto, people that have been investing in crypto, is that a lot of people do not fully understand crypto and how it works, cryptos and how it works. An example is if you're someone that it's comfortable investing in traditional assets, where you know that, okay, I'm investing in a tangible, maybe real estate or stocks, that there is a company, you're buying a company stocks or investing in a startup, you actually seeing the company or the business or the investment.
Yes.
If something happens tomorrow, you can actually walk into their office or pick the phone and call someone, and somebody would attend to you and explain what happened. And there is a regulator, that regulates that space that you can always escalate to if something goes wrong. On the crypto space, on the other hand, is a lot of these things are missing. There is no central regulator, there's no tangible assets, and it becomes a bit difficult when something goes wrong and you're trying to seek redress. And it starts looking a lot more like some of the schemes we saw earlier in Nigerian space, whereby if you're one of the ones that got in early, you end up being one of the winners, and the guys that came in at a later date now get their fingers burnt. So it's a very dicey area, but my advice would be, like I mentioned earlier, try as much as possible to understand the space you're going into. Regulated spaces are more secure because, like I mentioned, you can always have somebody to complain to, you have a way to seek redress. Crypto is quite different. You need to be a high-risk investor to get into that space. Even if you fully understand it, you also need to be a high-risk investor to get into that space, and also know the implications of getting into that space. Because if something goes wrong tomorrow, if the investment house, if I can put it that way, you invested through, gets shut down tomorrow, like a couple of them have happened in the past, what do you do afterwards? If you put your life investments in the investment house and it's an app, for instance, and the app shuts down the next month or the next 2 months, you actually have nobody to talk to. So it's good you understand all the ramifications, like I mentioned, the risks, the rewards, have an exit strategy, and be sure of what you're getting into, so that it's not when something happens tomorrow, it's as if you are not warned or something like that. But like I mentioned, it's a dicey area. People have cleaned out, people have gotten their fingers burnt. It's about knowing yourself, your risk appetite, have an exit strategy, and then know what you're getting into.
Yeah, I was going to say, know yourself, because you need to understand if you're a high-risk investor or a low-risk investor. But I personally think, I don't understand it. It's only something that I've had to force myself to start learning recently, right? Because I was dodging it, to be honest. I didn't understand it at first. But now, again, we live in a digital economy. I feel like I believe there's going to be utility, because crypto is not just Bitcoin, for instance, right? There's a whole blockchain technology. So it's even understanding the entire blockchain technology and the utility in real life, right? Some people, you can save contracts on there, you can save documents, people can use it for wheels. And with this whole metaverse conversation coming up, which I am absolutely interested in, right? It's something that is going to be a fundamental part of the whole Web3, technology. So I think we need to understand it. I do believe there's going to be utility more and more, right? And so I feel like even though people are cleaned out, people don't understand that, people are just chasing the price went up today, price went down tomorrow. I do believe that some people don't understand it. I think we should take our time to understand it and what it means, maybe not for now. For now and obviously for our future, and see because I think one of the things that people say is, like you've said, what's driving it? What's the underlying assets? We don't know, but again, we should not just then lean on only what we're used to, but we should try and understand it so we see how that plays out in our future. Do you see? Well, yeah, thanks. We missed you, Eniola, for a minute.
I'm so sorry for the break in transmission. I saw that you went on. Thank you, Rena. Thank you, Barry. Thank you, all of my panelists. I saw that you went on with it. Thank you so much. I just want to ask, is there any more that any of you would want to add before we go to the question and answer? Rena, Barry, Anike, Mr. Rotimi, is there more you like to say concerning the topic before we shoot to asking questions? If you have slides, presentations, or any of that.
I think we can go into the questions, and maybe some of what we have missed will, talk about.
Is that fine, Anike, Ebere?
Yes, that's fine.
Yes, you can go ahead.
Okay. So first of all, I would like to ask Iberi particularly. When you were talking, you mentioned something about mentors. First of all, I think that Africans generally, we don't like to talk about our finances. We think it's something that is very private. Like most of people don't even tell like their fellow colleagues at work their salary range. So like my perspective about having a mentor is somebody that is not open about their finances in the first place. Getting a mentor to opening up to a mentor about like, it's different for maybe career and all of it where you just say, oh, I want to do this, like telling people where you are, because I feel like it comes with a lot of vulnerability, and just opening up to somebody that, oh, this is where I am financially, what can I do about it? What can I, like, the people are not, I don't think people are there, everybody is there, like where they can talk to people about it. So like in place of mentors, would you say that there are other ways they can go about it? Maybe if they are employing somebody like a wealth manager or something, like I would just really like you to elaborate on that mentorship part and how it will fit for everybody. And do you understand my question, Ebere?
Yeah, yes, I do, Enola. I do, and I think you have a valid point. Finance and discussions around finance, especially when it's very personal, is something people tend to shy away from, both from the mentee, which is the person seeking advice, and even the mentor himself, wanting to, or being in a position to tell you, okay, these are the kind of things I invest in, and these are the ways you can also invest in them. It's a dicey area, and it takes a level of trust for someone to open up to you at that level. Yeah, so you have a point. But before I answer your question, just to also mention that, even though those challenges are there are also ways to approach this, there are ways to approach this and people will be able to open up to you. But I think for the mentee, you need help. You should be able to open up. You should be willing to open up to get the help you need. I think that should be a no-brainer. But I understand the reservations people have. But if you're the one that needs help and you need advice from people that are doing things that you aspire to do, then it becomes easier for you to open up and ask questions and get the understanding that you need to do those things. I think where the challenge is, even from the way I say it, is the mentor opening up to accept to have you on board, So also when I say mentor, it doesn't have to be like a one-on-one thing. There are associations, there are groups, investment groups, associations, and people that have come out themselves to put themselves out there to say, okay, this is what I do, and I'll be able to mentor you, to do the same things I'm doing. And you also have to be careful because a lot of them are not very valid. So but you need to be careful to look out for the valid ones and find the kind of advice you need. So in place of mentors, there are 4 panelists on this discussion, and I believe each of us we are experts within our own organizations and the areas we cover. Even if you don't have a mentor you can relate to, you can always approach a reputable organization like any of the organizations represented here and talk to an expert, investment expert. This is my situation, this is the amount I have, or this is the amount I can have in the next couple of months, and I'm looking at how to grow. First of all, retain this amount or these funds, and also then grow it over a particular period of time. You will have someone from any of these organizations that can sit down with you and explain, basics of investments and the kind of investments available based on your own peculiar needs and situation, and then, walk you through the investment process and then help you manage and grow your funds. So, if you can't find on a one-on-one basis, if you can't find a mentor, seek out a reputable organization, engage one of the investment experts within the organization and get the advice you need. A lot of these organizations offer this investment advice for free. I know VBank for one would work with you and advise you on what to invest in. Even if we don't have those particular investments within the organizations, we have partner organizations that we can link you up to that can help you grow your investments and manage your investments. So I mean, that would be another way to go about it, by seeking out the organizations and then engaging someone there.
Thank you, Ebere. Does anybody else have anything to say concerning the question? Hello?
To add or reiterate what Ebere said, I mean, I think he's pretty much covered it, but it's self-education, right? And there's lots of free advice, right? I think you should just find a base or an anchor, right? From like the very basic, fixed deposits, and just kind of build your knowledge to more complex stuff, right? But even understanding the basic asset classes will be a place to start, because most of the products that are available or the solutions that are available are usually a combination of these, right, in different proportions and whatnot. So it's understanding those basics. I think that's where everyone can start. But like he said, there's lots of free advice, and there's all of us from different, financial institutions here. But just taking the interest to learn and to know more about what it is that you're investing your money in is important. Yeah.
Thank you. Thank you so much, Rena. Manike, Mr. Rotimi.
Okay, yeah, so for me, just to reiterate what everyone has said, first of all, there even has to be a willingness, to want to learn. Some people don't even, they're not even aware that they lack that knowledge. And the truth is, once you're willing, you can get the information anywhere. And about confidentiality, you don't really need to disclose what volume of funds you're investing. All you need to let them know is, oh, I have this risk appetite, I have this is my direction. And once you're able to understand your direction, and then the advice will come. So you can get this advice from anyone, but you have to be willing, first of all, to to want to invest and to want to get the knowledge that's required to make the right decisions.
Thank you.
Yeah, so just to add to what other speakers have mentioned. So it's about, knowledge is very important, and you can only learn from people who are experienced, who have experienced, who have succeeded at one point, and who have also gotten their fingers burnt in making wrong decisions as well. So because we look at mentorship from the area of success alone, mentorship will also be as a result of failure. Where other people has failed, they can advise you not to tread that path. So, all right, thank you.
Thank you so much. Thank you so much, everybody. To our viewers, you can still send in your questions. We have 2 questions here already, and so the first question here is, what way can you get investment knowledge? We kind of spoke about this when Iberi spoke about mentorship and getting basic knowledge on different asset classes. But yes, so Brenna, what other way, aside if you're not ready to speak to somebody yet, what way can you get investment knowledge? And I also like to say that while answering our questions, we should try to speak on the asset classes in simpler terms, which like everybody can, like where we see fixed assets, mutual funds, and all of this, in ways like everybody would catch it. Thank you. So Rena, what other ways do you think people can get investment knowledge?
Investment knowledge. Well, I can speak to what we do, right? We have a lot of we have blog posts, right, where we try to tackle specific issues, right? So we can come from fixed deposits, mutual funds, which I'll speak to shortly, but things around black tax. We have a blog post on black tax, and I mentioned that because it's something that everyone deals with. Black tax is you have money, you are earning money, and then bros, how far? If you find me 5K for the somebody has to go to school, somebody has to, you get your friends and your families calling on you, right? And it's great to give, but how do you plan that, and how do you put down the budget? Those are some of the kind of topics that we also deal with outside of just investing. Things around insurance, right? I think it's something that we don't really, really talk about, because if you have health insurance, for instance, then it means that if you ever were sick, then you're sorted. You don't have to think about an emergency that happens that you would then need to cough out the money that you don't want to bring out before plus more, right? Because that's another way to kind of, you get saved or plan, put things on the budget. So if we're going to plan your health, for instance, or health expenses, why don't you just buy health insurance so you're covered and there are no surprises? Things like that are kind of topics that we cover, as well as specific asset classes. So speaking to fixed deposits, it's just simple. Your money is already sitting in the bank anyway, because when you get your salary, when you get your income, your money is sitting, you tell the person transfer the money to this bank account, right? Question is it earning anything, right? Your money should not be idle. And so you can lock in your monies, right? It's almost like you're lending in the institution your money for a certain period and you're charging them an interest rate. I mean, that's the best way I can explain it right now. So you're locking in your money for 30 days, 90 days, 1 year, and saying this is the rate I'm going to get on that money per annum, right? And so that is fixed deposits. You have there's some other some are going to be really complicated, and I to be honest, I'm even willing to hold a different session to talk about the underlying asset classes, if you like, right? Because you have fixed deposits, you have mutual funds. Now, mutual funds are very diverse because the type of mutual fund will depend on the asset classes that are on the underlying assets. So a money market mutual fund, for instance, would be a basket of money market assets, right? And money market, no, try just stay with me, promise. I promise I'll try not to make it complicated. A money market mutual fund, a mutual fund, first of all, is that people are mutually contributing, right? Mutually contributing, all of us here can contribute, say 10K. And that entire money, we have now taken, let's say everything that we now contribute is 2 million naira. And we put 500K in a fixed deposit, which I have just explained now. We put 1.5 million in treasury bills. Everybody has a unit in that total investment. So whatever we earn, whatever returns we get from both the treasury bill that is 1.5 million and the fixed deposits of 500K is what everybody will then share. It's like doing a job, only that this is superior to a job because now you're going to earn interest. If you do a job with your friends, everybody will contribute 10K every month or to the end of the year. At the end of the year, you're going to get 120K, right? But in a mutual fund, you're doing almost the same thing, putting it simply, but you're then going to earn interest. Everybody in that mutual investment earns interest, pretty much the same interest. But obviously, if I put 20K, the interest I'll earn will be different from the interest you earn if you put 5K, but we're earning the same rates. Do you see? So in a mutual fund, and then I was talking about how you have different mutual funds. So a money market mutual fund would have only investments in money market assets. Do you see? Or money market investments. Let me not say assets. If a dollar fund would have investments in fixed deposits, treasury, fixed deposits and bonds, but in dollars, right? So they're just different. An equity mutual fund will have, investments in stocks, right? And so on. And again, I don't think that this session that will kind of adequately address it and the questions that come there, thereafter, but I'm happy to hold a different session to discuss this. But yeah, that's pretty much that's our goal, right?
Thank you. So addressing the questions, then you can sign up for their blog post. So I think like when you follow like a lot of like their companies, if you follow Zimfirst, Lead Bank, Cordless, they send emails and blog posts concerning like different investment. Creditville, if you follow, even you can follow them on social media, you can follow all of these companies, Creditville, Cordless, Lead Bank, Zimfirst. If you follow them on Instagram, Twitter, all of these places, they put up posts about investment and all of those, and they even send emails and all of that. So those are ways you can read books and read books concerning investments and all of that. So another question we have is, and this is to Anike, what type of investment combination would you recommend for 30-year-olds and 40-year-olds investors with a moderate risk appetite? So we've been talking about risk appetite since. So people have, we say we have low risk appetite, medium risk appetite, and long risk appetite. So 30-year-olds, 40-year-olds, their mommies and daddies. So where can they put their money? Because the moderate is saying that they really like it, they really want like a safe place where they can put their money in. And Anike, thank you.
Okay, thank you. Okay, so yeah, as a 30 to 40-year-old, I'm sure you'll be looking at growth and maybe income. Possibly you're a family, and you're looking at school fees in the very near future. And so for us at Cordless, we always encourage diversification. So we won't encourage you to put your funds in one product. We'll encourage you to move across different asset classes so that you have the best of all of them. Some of them, if you're looking at a longer term objective, then you could look at equities, that will give you steady income, but you're investing for the long term, and that could later on, fund your children's school fees in the future. And if you're looking at an immediate purchase, maybe in the short to medium term, then you can look at things like mutual funds. And also, if you have idle cash, or idle funds, or you don't want them to just sit around in a savings account without giving you any significant returns, then you can look at mutual funds. At Cordless, we have so many products that can, give you the best returns based on your risk appetite, based on your time horizon. So if it's a mutual fund that you're looking at for the short term, then we have it. If it's a long-term investment you're looking at, then you can, consider our Cordless Milestone fund, and we even actually have a product that is targeted towards children. It's called the Every Child a Milestone Fund. It's a fund that allows parents to save, for their child towards a future project. So the 30 to 40-year-old has a lot of choices. They're not left wanting for a choice. And if you're a bit big on foreign currency investments, then you can turn towards a Eurobond. And luckily, at Cordless, we have Eurobond notes that cater to those category of clients that are unable to come up with the 200,000 minimum that's required normally for Eurobonds. And so with $5,000 only, you can invest in our Eurobond notes, and that will give you a semi-annual return and the possibility of capital appreciation in the very near future. And so, like I said before, you're not left wanting for what kind of investments to choose from. You have a wide array. And lastly, I'd just like to talk about the fact that, you'd want to be able to invest on the go. And so we have an app that can give you the opportunity of easy entry and easy exit, because I know that's something that a lot of people are always keen on. How easy is it to come into an investment? Are there any entry costs? Is it easy to come out? Do I have any penalty, when I'm coming out of these investments? What is the minimum entry? So, we have all those products at Cordless, and yeah, so that's it. Thank you. You're muted. We can't hear you, Eniola.
I said thank you so much. So 30-year-olds to 40-year-olds have a lot of options investment options to get from. So another question here is, what are the various investment assets your firms have, the duration, holding period, return and risk? This is a lot. It also says which investment asset gives the highest return, which can we get in the Nigerian market, which sectors can one invest? Wow, this is a lot. So this person asked for questions. This is from Goke Ade Farasin. So I'm going to read out the question, and since we are four of us, everyone will take one aspect they would answer. So Mr. Rotimi, what are the various investment assets your firm? I think everybody should quickly go through this so that everybody can know. All of our guest speakers should answer number one. Please, we'll just say it's like, what are the various investment assets your firms offer the duration, the holding period, the return, and the risk. Please, let's just say it fast. From Mr. Saritimi, then, and I'll call everybody to say what that is. Mr. Saritimi, are you?
Okay, yeah, I'm with you. All right, thank you. So various investments that we have, and CreditView, we have a group. So we have an asset management. We have an MFB, which is Redwood, the asset management Redwood, and the MFB touch code. So let me start from the MFB. So we have a fixed deposit, which offers, the best return. We offer as high as 18-19%, depending on the volume and the amount. So between 30 to 365 days. So, and our asset management, we have mutual fund, we have a fixed income fund as well, and we also have the equity fund. We have halal balanced funds as well. So we can help invest in commercial paper, in T-bills, in fixed deposits, and which offers good returns. So, and we have on the allowance balance funds, we invest in instruments such as the Sukuk, which is non-interest. So depends. So we offer varieties of products that we can advise our clients to tap into. So based on their peculiarities.
Thank you. So, Anike, what are you mentioned some before,
Okay, so I'll just go over it again. So at Cordless, we have the Cordless Dollar Fund. It's a dollar-denominated fund. Minimum entry of about $500 or $600, depending on the units. We have the Cordless Milestone Fund, like I said before. That's a long-term fund that clients can invest in. We have the Cordless Money Market Fund, quite popular. You can come in with a minimum of 10,000 Naira and the subsequent amounts of 5,000. We have the Cordless Halal Fund. That's for the ethically minded clients. You want to stay away from certain kind of investments, then the Cordless Halal Fund is available to you. And then we have the Cordless Fixed Income Fund as well. We recently launched these funds and they're very attractive, a minimum entry of 2,500. And like I said before, there's ease of entry and exit. You can fund these investments seamlessly, and you can also terminate them at will, without any penalty, as long as you've waited for the minimum holding period. Of course, if you're looking at larger volumes in terms of Naira and dollar investments, we can talk about the Eurobond investments, both Eurobond notes, which is $5,000 minimum, and then the proper Eurobond. And then we also have the Cordless liquidity management product, which is like a fixed deposit that you can put your funds in. And so I'm sure we will share our contact details if you have more questions about the various other details about the product.
Thank you, Anike. Thank you so much. So I can see that some of our participants want to ask questions, and they raise their hands to talk. So after all of our guest speakers mention their investment assets, then we would give opportunity for you to talk. But if we are not able to do that, you can send your questions to the question box. So Rena and Ebere, please quickly take us through your investment options in your firm. Thank you.
Okay, so who goes first? Rena, do you want to go first? Or should I go ahead?
Oh, sorry. Nigeria, my network.
Ebere, I think you should go first because our network is bad.
Oh, okay, thank you. So at VBank, we operate within a group. So we're a subsidiary of the VFD group. And the VFD group encompasses a whole lot of companies in different sectors, be it real estate, hospitality, banking and finance, asset management, etc. So I'll focus on 3 core areas and also mention some of the investments available within those areas. The first one is the real estate. We have investment options in real estate through our real estate company, which means you can invest in real estate within Nigeria, even outside Nigeria. We know how lucrative the real estate market is, even within Lagos alone. So you have options to invest. with little funds or little amount, you can invest and be a part owner of some properties within the country. And when those properties appreciate, you can then get your returns on them. On the asset management side, we also have an asset management company that has a lot of the products that has already been mentioned, the Euro bonds, the mutual funds, and stuff like that. And we also deal in precious metals via the asset management company. So for things like gold, you can actually purchase gold, whether it's for your own use or probably to keep and for capital appreciation, and then you can sell it off at a later date. That's also available through our asset management company. Then coming down to the bank, the V Bank itself, we also have a whole lot of investment options, ranging from the short term to the long term investments based on your preference. A couple of them which I would like to mention is our fixed deposit, which a lot of people have talked about. But two things set us apart when it comes to fixed deposits. One is the returns on our fixed deposit options. It's quite high, one of the highest within the industry. You can earn as high as 15% per annum in terms of fixed deposits. And there is no bottom or minimum amount you need to invest. You can invest as little as 1,000 Naira for 30 days, 60 days, 90 days, up to a year or even more. And you have easy entrance and easy exit via the VBank app, which you can download from any of the app stores, whether it's the Google Play Store or the Apple App Store. And once you download the app, you can open an account within 5 minutes on your own and raise these investments via the app, and see all the narration and all the description and choose the one that suits you best and put money into it, and you can start monitoring it from the app. And whenever you feel like cashing out, whether full liquidation or partial liquidation, let's say I have 1 million in investment, and after 3 months, I want to take out 500K out of the 1 million. I have that option to go to the app without any human intervention. I can cash it out, and the remaining 500 continues to earn interest for me. Even currently, we have some few products that are running that very short term. One is focused on January expenses. We know how January is with a lot of the expenses. A lot of us have DT Decembers and we don't plan for January, knowing that January is like 3 months in one. So we have like a very short investment option that you can get into before the end of the month that offers you 15% per annum, amortized for the number of months you invest, and you also get a 10% bonus of your first investment. So as an example, if I want to save 100K every month till the end of the year, then to get that money back in January, and I'm saving 100K for each month, I can get 10% of my first investment out of that money as bonus and still earn interest on whatever amount I contribute to the end of the year. So we also have a target savings, which is targeted as salary earners. A lot of us get our monies at intervals, maybe at month end or at the end of every week, or even daily, depending on the kind of jobs you do. So you also have the option of logging into the VBank, setting up a target savings and saying that, okay, maybe on a daily basis, on a weekly basis, on a monthly basis, I want to be saving this amount of money. And the app then automates that for you. And whenever it's time, whether it's daily or weekly or monthly, the app debits you that amount, puts it in an investment account and starts paying you interest based on whatever amount you have. And again, like I mentioned, you can always cash out at any point via the app without any human intervention or any human contact. So these are some of the investment options. We also have a whole lot of them. And as mentioned earlier, you can follow any of our pages. If it's on Instagram or Facebook or Twitter, you can follow the vbank.ng on any of those pages, and we'll drop communication from time to time on investments and details around them. So you can get all this information and then make your decision on how to proceed.
Thank you so much, Iberi. So after Rena speaks, I'm going to allow some people to talk. But Rena, there's also a question here, so I want you to talk about it while we are talking. Which is, the person says, please, what's Zinvest all about, and concerning a well-grounded and reliable investment? Yeah. So while talking about the investment assets your company has, please, can you also touch that? Thank you. Thank you so much, Rena. And please, yes.
Right. Okay, let me go through Zinvest. I'll start with Zinvest. Zinvest is a SEC-regulated asset manager. So we do investments management pretty much for the investing public. but it's also a group, it's a subsidiary of a group of companies, the ZQuest Group. So the ZQuest Capital that invests in startups. So we've invested in about 50 startups so far across Africa. There's ZVance that does payroll lending, as well as ZCap that does interdealer broking. So fixed income trading, pretty much, without getting too technical. For Zinvest, we're a fintech, pretty much just distributing and making it easy for people to invest. It's a digital wealth management tool. So the Zinvest app you can download on the iOS and the Android store, the Play Store, and you're able to do a number of things. But I think for us, we have lots of products. But for us, it is how do we sort out the issues that you have or serve you, with the kind of your unique circumstance. So you have products like a wealth box, just to set aside money, minimum is 200 naira, just so that you just throw money in, at any time, and it's earning returns for you at every point in time. You have target savings, where you can say, this is my goal. I'm trying to pay my rent and I want to contribute this much, on a monthly basis, and you can automate that, and your account is debited on a monthly basis or a daily basis, depending on how you set that. The dollar investments that you can invest in as well. In fact, we're launching our dollar and mutual funds next week, actually, with a minimum of 1,000 naira. You can invest in a mutual fund. With a minimum of $100, you can invest in a dollar mutual fund. But more important is if you look through everything that we have and you still have a specific customized need, you can reach out to any of us. But today you can do everything on the app from beginning to end. You don't need to talk to anybody really, but you can still reach out to us on our website, zinvest.com.ng, on Instagram at zinvest.ng as well. Pretty much that's it.
Thank you so much. Thank you, Brenna. So I'll be there were two people raising their hands initially. Please raise your hands if you want to ask questions. And when you raise your hand, please introduce yourself, where your organization you're calling from, and and ask your questions. And any of our panelists will be willing to answer. Promise Aqua, please, if I do not pronounce your name properly, please forgive me and just introduce yourself. I promise.
Hi, Eniola. Thank you very much for that brief intro. So my name is Promise. I am an accounting professional. I'd love not to disclose my name of my firm. So I'm a bit concerned about financing for your learning how to finance, manage my personal finance with your products. I'm looking at an investment and savings combined together as a portfolio of 100,000 naira on a monthly basis within the next 3 to 6 months. So I would like your recommendation of the various products you think I can use to make up that portfolio of 100,000 naira on a monthly basis within the next 3 to 6 months.
So thank you so much, Promise. So we can sharply all just run through it. All of our speakers, please, let's just answer the questions very fast. Thank you. Mr. Rotimi, thank you.
Oh, so sorry, I didn't know I was muted. So yeah, so we have various products that we have an app which is called the C Money app. And on the C Money app, we have a savings, we have a lot of savings and products, and we have a Save Flex, which is between, you can save for 3 to 6 months, which, where you get a return of 12%, per annum. And we have a Save Smart between 90 days to 179 days, which you get a return, an interest rate of 15%, within that period. And we have a target savings account as well that you can save for up to 730 days. That's 2 years duration, which you can get, you'll be saving there on a daily basis, and you get up to 16% for that period. So, and you will just have to download the app, say, set a debit order, debit instruction into that account into your C-Money app. You get debit, you move money from your salary account to that app every month, and your investment continues to grow. So we also have the fixed deposits, that you end up to, between 15 to 18%, depending on the tenor. So we have varieties of products. So, and you can just visit our website and www.creditview.ng, for more. Send a mail to wealthmanagement@creditview.ng, and any of our dedicated and relationship managers will respond to you. Thank you
much. Anike, what does Cordless have for us?
All right, thank you very much. So for us, I'm sure you can invest in a Cordless money market fund with 100,000 naira and subsequent 100,000 naira every month. So, but if you would like to go ahead with this, I'll just give you our details. You can reach us on 0700-2673-767, or you can visit our website www.cordless.com, and then our contact center email address is contactcenter@cordless.com. And if you reach out to us, I'm sure we can get back to you on how to go about commencing a relationship with us. Thank you.
Yeah, Iberi.
Okay, yeah. Promise, thanks for the question. So I have two options or recommendations for you. One is our target savings option, which fits like a hand in the glove for the option you want as a salary earner. Like you mentioned, you want to invest 100K per month. What this does is it automates your savings for you. You just pick any dates that you want to make the contribution, sets the duration of the investment, and sets the amount as well. And on those dates that you've set, the app will automatically debit the funds, put it on an investment account for you, and pay you interest on it for the 6-month period. So it will debit you every month for the 6 months. And when it's time, or maybe the deadline you put after 6 months, it also automatically liquidates the investment for you with the interest, and then credits you with the total amount of money you're supposed to get. This you can do easily by yourself by downloading the VBank app from the App Store. You can search for VBank from maybe Google Play Store or App Store, depending on your device type, and then open an account and set up the investment yourself. As you're setting it up, you see all the details, and you even see the total amount you earn by the end of the period. So this fits exactly into the savings type you're looking for. The other option I have for you is a fixed deposit, which you also have the ability to set the duration of the investment, 6 months, like you said. So you can set it on the app as well, and the app will pay you interest on this, and you can earn as high as 15% on this investment for the period. For more information as well, you can follow us on social media across all the platforms, social media platforms, vbank.ng, at vbank.ng. You can go to our website, which is www.vbank.ng to get more information. Or you can also send an email to support@vbank.ng. You can send an email to support@vbank.ng, and somebody will pick it up and also reach out to you, engage you, and walk you through the whole process of downloading the app and setting up the investment.
Thank you so much, Iberi. Over to Rena.
It's pretty much, there's lots of similarities, obviously. I would say, Promise, that you try our target savings, because pretty much just fits in. You can invest the first initial investment of 100,000 and set up a direct debit on your account. So you just keep, contributing on a monthly basis. But obviously, take the conversation further. On Instagram, you can reach us at Zinvest app. So that's Zinvest app. Or you can send me a message. You can reach out to me on LinkedIn. Right now, see me on LinkedIn, and you can just take it from there.
Okay, thank you so much to everybody. Please, you can just follow their social media apps, and it'll be easier. Their social media platforms rather, and it'll be easier to communicate with them. Yes. So, Promise, I hope that answers your question. I hope we've answered your question.
That's pretty much. Thank you very much.
Thank you so much.
Appreciate it.
Yeah. So, Mr. Lekon Olaniyo, I will allow you to please introduce yourself, where you're calling, where you're speaking from, and ask your question. Hello, Mr. Lekon. Hello? Mr. Lekon Olaniyo. Okay, so we'll just Ayodeji. Can you hear me, please?
I can hear you.
Okay. So Ayodeji, so please ask your question. Okay, I can't hear any of them. Please, if you are unable to talk, just send your questions to the message. So somebody said, Mr. Goke Adeparasi said that we've been mentioning conventional investment assets, and that we should elaborate on the following investment assets. So the thing is, investment is a very, very broad topic to talk about. And he said we should speak on ETFs, derivatives, non-fungible tokens, and venture capital. So I think that we're just going to spread this around. Everyone should just, so ETFs, derivatives, non-fungible token. You can just, from our panelists, anybody can explain anyone they want to pick.
I'd like to talk about NFTs. And just simply because I've been learning about them and I find it's interesting. I mean, first of all, thanks, Koke, for the question. But I think, again, similar to what we have spoken about cryptocurrencies, right? There's still obviously some ways to go, even regarding NFTs, right? So NFTs are non-fungible tokens, and non-fungible tokens are best way to explain it for me would be if you gave me 100 naira in your lab or bouquet, you gave me 100 naira and I spent the 100 naira, I can bring out another 100 naira and give you. You're not going to be saying, no, give me that particular one I gave you, right? Because they have the same value, they can do the same things, right? It means that, but when you have a Mona Lisa painting or something, there's just one Mona Lisa painting. You can have thousands and thousands of prints of it, but there's only one original Mona Lisa painting, right? And so the non-fungible tokens that's the best way to explain it. There's just one original, only one person will ever have it. And that's where blockchain also helps, because it is on the blockchain, therefore it's not replicated. You can verify that this is one person that has it, right? Now, again, that's what I spoke about earlier about utility. What's the utility of this? Because you see the Bored Ape NFTs, for people that follow NFTs, you see that whole Bored Ape NFTs selling for thousands and thousands of millions of dollars, right? And obviously there's a whole trend around it. So there'll be some hype and people are buying into the hype, obviously. But you also have some people, I mean, in the last couple, I talked about how Zpress obviously invests in startups. So I've seen a couple of startups, but there was really one interesting one where they have a fundamental business and they also want to print their own tokens, right? And those tokens can help you do many things within their ecosystem. And so I could see the utility, because those tokens within the ecosystem, for all the users in the ecosystem are able to use those NFTs, those tokens, and trade those tokens. You have some companies that are coming out with limited edition NFTs that will help you have access to, say, for instance, a Beyonce concert. That's the utility. Today, for instance, you would have people that would have bought a Beyonce concert tickets, but then they would go and sell it, because as it gets closer to the time of the concert, someone can just say, you know what, it's better for me to sell this thing and get times 10 of my money than to go for this Beyonce concert, right? And they will sell it. And so those are what holders of those tickets or those tokens can then do, right? If you're able to get a token for doing certain actions, or being part of a club or doing, buying an NFT today that gives you utility in the future. I mean, it's something to read and understand. And I'm saying it like this now, like I'm an expert, but I'm not. But it's because I've also taken the time to go, learn about it, and I'm still learning about it. But in understanding NFTs, you need to understand what is the utility, meaning what am I going to use this token to do? Does it have a value that helps me do something, that gives me access to something, right? So I'm able to trade it in future and will have value outside of the hype. Because it's the same way that in the stock market, some people say, remember in the past when they say, this is the stock they're selling and everybody will go and buy it. And there was no fundamental understanding for why they should make that purchases, right? Those purchases. And obviously that's supported the crash, right? But today you're seeing people saying, what's the fundamental of this company? What is their growth strategy? Do they have corporate governance? Those sorts of things, right? Meaning that there's some viability of that that company. In the same way for NFTs, if you're buying NFTs, then you need to understand what is the value, the future value of this thing. What will it do? What will it give me access to? That's pretty much what I've learned. So.
Thank you, Rena. So if you are buying NFTs, just know what is going to be the future value for what
Thank you very much, Rena.
Anike, which of them would you like?
Well, thank you, Rena. Yeah, so it's a learning opportunity for us all. At Cordless Asset Management, we are regulated by Securities and Exchange Commission. So we're not big on non-conventional investment opportunities. However, we are looking to see that maybe in the future we'll be part of it. However, I'm sure the products that we offer can suit any of your investment objectives. But we don't do non-conventional products at Cordless Asset Management.
Okay. Ebere, Mr. Ritimi, is there any of them you want to elaborate on?
Hi, Eniola. Not necessarily, because I think Ren, if I'm correct, has summarized NFTs quite well. I didn't get the other asset classes you mentioned. I didn't understand them. So, but
you mentioned them exchange traded funds, derivatives, and venture capital. I think he just wants to know like what they're about, just not necessarily to offer them, but just to know what they're about.
So that's a lot. There's a lot in that basket, and unfortunately, I am not an expert on all of them. I'm not saying I am, but at least I have some level of knowledge, quite some level of knowledge in a few of them. If you can reach out to me on LinkedIn, we can talk through at least the ones the ones I know about. We can talk through them a bit in a bit more detail. But in terms of non-conventional investment, there is one I would like to talk about briefly, which is something that within our group, VFD group, we've started offering recently through one of our companies called ArtSplit. ArtSplit, that's ART, then split. So it allows you to invest in arts just the way you invest in a company's shares. So art lovers today know that art is usually very expensive. For you to buy an art, a quality art, maybe we're talking about hundreds of thousands of dollars or even millions of dollars in some cases. But ArtSplit has come into the market to help regularize or regulate the African art space by offering the African arts on the general market, on the retail market, so that anybody, you and I, can invest. If you don't have the hundreds of millions to purchase the arts wholesale, you can buy bits of it, maybe 10,000 splits of it, or 100,000, even 100 splits of it, depending on how much is going at that time. And it's just like buying a company shares. You can either appreciate in value, and you can sell it at a later date to get growth or returns on your investment. Or when this art is even leased to maybe museums for displays and they pay rentals on it, you can also take part when that rental is split among all the owners according to the number of splits you own. You can also get your own share of the rental fee. So you have two ways of earning, either through the rentals or through capital appreciation. So this is one of the non-conventional investments that we're currently pushing through one of our sister companies called Asplit, which I think will be interesting to some of our listeners. But like I said, for the ones you mentioned, you can reach out to me on LinkedIn. We can take it up from there.
Oh, thank you so much, Mr. Bertimi.
Yeah, look at like other speakers have said, we don't because we are regulated by CBN, and we also have a subsidiary regulated by SEC, so we don't venture into non-conventional investments. So I wouldn't have anything to say on that, because we are speaking on behalf of our organization, so no personal capacity. So thank you.
Yeah, okay, thank you so much. So one other question I'd like to is to Anike. Anike, please, what is the difference between a sinking fund and an emergency fund? Do we? I don't think I've seen that before. Can you hear me?
Okay, yes, thank you. All right, so an emergency fund is you have a need. Hello?
Yes, we can hear you. I think your mic is muted now.
Okay, can you hear me clearly now?
Yes.
Okay, so you have a need, and you set funds aside towards that to take care of that need. All right, and then the sinking fund, I like to use this Euro bonds. If a sovereign issues a Euro bond, and maybe in the future they're unable to meet their obligation, the sinking fund is available to take care of that obligation on behalf of their investors.
Okay.
I don't know if that's clear.
Okay, thank you so much. Does anybody else have anything to say concerning sinking funds and emergency fund? Okay. Good. God's will Jumbo says that Christianity business comes to economy. Say, does anybody offer SME loan for businesses? Does any of our speakers, do you offer SME loans for businesses?
Yes, Credit we offer SME loans.
Okay.
So we offer SME loans.
Okay.
So they can reach out to me. Maybe we'll share our contacts after the meeting to discuss further.
I'm seeing a lot of really serious questions here, and it's quite. I don't think we'll be able to answer all of it because of time. But all of our speakers have dropped their contact details. You can contact them on LinkedIn, Instagram, their websites to answer some of these questions that has been sent to us. There's this other one I saw that I wanted us to ask. It was directed towards Zim first from Molanikon. It says he's into branding and printing. I would like for Zimfest to enlighten him more on financial discipline and management. Yeah. Is there a way, like maybe your platform promotes financial discipline and management right now?
Olalekan, right? This thing again is a lot of. I think Rotimi had mentioned it earlier about building a savings culture. So it's almost like a self-management thing, meaning that you have to say this every month, right? As I am paying for lights, for rent, for all things that I'm supposed to. Am I paying myself, right? Am I taking some of that money and keeping it aside for my future, for my short-term and long-term needs, right? So first of all, you have to, but like a better word, you have to rate yourself to be able to say, what, I'll pay, because people are going to come and ask you for money, right? The economy is hard. You have people, like I talked about black tax earlier. So you're going to pay, the landlord's going to ask for rent. Your car is going to ask for fuel, all those things, right? Are you paying yourself? And so, yes, there's some self-management that definitely has come into it. But I think that's right. One of the things that we do, like I mentioned earlier, is you have to automate certain things, right? If you automate on a monthly basis, this money is coming to my account, right? I don't have control of it because I've already set that instruction. then it means on a monthly basis, your account is debited for your investment and you don't have to think about it, as you should with many of your utilities that you need to take care of. I mean, I think that's what I'll say about that. But I mean, again, you can still reach out to me on LinkedIn and we can have a different conversation or a deeper conversation for your specific circumstance. Right?
Thank you so much, Rena. Please, our participants, if you have any more questions, you could reach out to them on LinkedIn, their social media platforms, their websites, and all this. So the last questions from me directly. So of recent, there was a debate on Twitter about whether to hold cash or to hold equity, to have equity, especially with the way the economy is right now. Just yesterday, MBS released their reports, and inflation is at an all-time high, the highest it has been since 2005. And we know that when inflation goes up, it affects like the equity markets and all of that. So in a time like this, which would you advise people should invest in a fixed income, a fixed deposit? Would you advise you put it in a fixed deposit investment, or you buy more equity right now? Like what is your advice, and which do you think is best to hold? Anike, I would like to answer for you to answer first, then everybody answer my question. Thank you.
So in this situation, there's really no one size fits all. It really depends on your objective. I've said that from the beginning. We might have the same family composition. We might have the same level of education, but our objectives might be different. I might be a long-term investor. Somebody else might be a short-term investor. So, and I've always said it as well that, you should diversify. So you won't put all your funds in one asset class. You could, spread them around, depending on what your objective is. And so whoever has, for you that has that question, Eniola, I'll just advise you to speak to a wealth advisor, and we can guide you depending on what your objectives are and what your risk appetite is and that your time horizon, and then we can give you the right approach towards investing. But there's no one size fits all, in this circumstance. Thank you.
Thank you. Ebere, any advice from you?
Yeah, so riding on from where Anike stopped, which I agree a lot with. There's no one size that fits all. I think that summarizes it a lot. You choose what works for you and then invest in it, or speak to a professional and then invest in it. But one thing I would say is you can't totally eliminate cash. There are uses for cash, in our day-to-day, everyday life. But don't keep idle funds. That's my advice. Because you mentioned about inflation and how it's getting worse and all. What that actually means in layman terms is that the cash you have or the idle naira you have is losing value at that rate every year. So if inflation is 19%, for instance, it means if I have 1 million naira today, 1 year from now, it will be worth 19% less for me. So the only way to be able to counter that is to find an investment that gives me something close or even more than that, and then put my money into it, and then to use it to ensure that my money isn't losing value. Again, but like I've said over and over again, before getting into any investment, try as much as possible to understand it, speak to an expert, find a mentor, seek the information you need, invest, have an exit strategy, and then also, look out for your returns.
Thank you. Mr. Rotimi.
Yeah, so at this time, when the economy is volatile, so there's propensity for a lot of fraudulent scheme to spring up, because at this point people are just looking for returns because of the fact that people don't even know where to invest. People don't know, spending capacity is going down. So people are just looking for, for where to just put their money. So, and this is a period whereby, one has to be very, very, very careful, try to balance your risk and returns and ensure that, because high risk high returns, lower risk go with, higher safety as well. So you just have to balance it out. Like Anike said, that it's not a one size fits all. Your objective determines, it determines the kind of the way you do your asset classification, the way you diversify your portfolio. So if you're a long-term person, if your objective is long-term, so you put more, you allocate more to the long-term investment. So, and also, this period is when you need to understand that no matter, where you choose to invest your money, there's always a degree of risk, even to the supposed safest investment. There's still an element of risk, and we need to, knowledge is very important at this point in time. We need to understand, learn very well, learn about these products, learn how people generate the returns that they are promising you. So I think that's all I can say for now.
Rena, over to you.
Yes, pretty much what everyone has said. But I think two things I wanted to say was, one, you have all these asset classes. Again, your unique circumstance will inform what percentage you are allocating to the asset classes. It can be 0 on one end, and it can be, maybe 50, 30. Again, it sounds like a broken record, not one size fits all, because you're a unique person, you have a unique circumstance, right? So the asset allocation of your funds to these different investments will differ, right? But like also Rotimi said, this is, let us not then become, for lack of knowledge or for greed, then jump on the bandwagon of investments that don't make sense, or that they will promise you 30% in one day, you get returns, but you will not get your money back. Neither will you get, which kind of investment do you get my point? What kind of investment do you really want? Do you want something that is steady over time, right? Because again, this is a journey, right? Some people will say, oh, 5-year investment is too long, but by God's grace, you all want to live, for five years more, right? And you will get to that 5th year. And what would you meet there, right? It's that entire journey, building that discipline of investing, of, having a long-term outlook, looking at your unique circumstance, having a long-term, short-term, medium-term goal, and working towards it on a weekly, monthly, daily basis, right? As you are improving your life, improve your finances, improve your investments, and don't say, oh, it's too far, right? Or I want sharp. It won't work. It's not sustainable, right? So that the advice is, understand your unique circumstance, learn as much as you can, speak to an investment professional, right? And then build out something for your life, slow and steady, right? There's some sharp sometimes, do you understand? If you want to run one sharp business, but also understand the underlying, where is it going to, what's bringing out that income? Do you understand? I think you should take responsibility for your life is the underlying overarching point. Yeah.
Thank you so much. Thank you so much, Rena. Thank you so much, Anike, Barry, and with me. I thought that was my last question, but I'm very sorry. There's just one more thing, and I think it's really, really important, because between 2020 and 2022, there has been a lot of Ponzi schemes. A whole lot, like a lot of reports arresting like Ponzi schemes and all of that. I just want all of us in one or two sentences to just tell people like how do you know that this investment is not it, like it's too good to be true, how to spot that this is what they're offering is not real. The business, even their business model is not scalable. Like, how do you spot like a Ponzi scheme, like from like just seeing them? Like, how can you tell that this is a Ponzi scheme? Ebere, please, can you go first?
Okay. Okay, so I think the indicators are usually there. For one, this kind of schemes like to prey on people's greed for high returns within a very short period of time. So once you see someone or a scheme that is promising you very high returns for the shortest possible time. Usually the returns are way higher than what the industry average is. So an example is the industry is saying fixed deposit is 10% per annum as an example, and someone is going to offer you 30% in 3 months. That is already an indicator for you to say, okay, I need to look into this a bit more to be sure that is real. The second thing I would say is there's usually no underlying business for those schemes. So if it's a bank, you can say, okay, they're in the business of banking, they're regulated by the CBN. For most of these schemes, you can't see what the actual business they're doing with the funds you're giving them. So there's no underlying business, there's no business model that is discernible, and what they're just doing is to collect money from this person and use it to settle the other person. So I think those two things are usually the major indicators. First is high returns in the short time, very high returns in the short time. Secondly, no underlying business backing up the scheme.
Okay, thank you, Anike. Over to you.
Okay, thank you. Yeah, just like Iberi has said, for me, when you see that maybe the returns on fixed deposits are maybe like 10%, and then someone is offering you an outrageous, it's a no-brainer to know that this is just a no-go area. And then one thing I always preach, and is that you do your research. Even as an individual, if you're dealing with anybody, you do your research, you do a bit of background check. Same thing if you're dealing with an organization, do a bit of background check their board. Do they have a reputable board? How long have they been in existence? What's their objective? What's their mission and their vision statements? Look at all those things, and you'll be able to understand, if it's a company you'd like to associate yourself with. But the red flags are always there, always. I think we just tend to overlook them and think, oh, maybe it won't happen to me. But the red flags are always there. Thank you.
Thank you. Sorry to me.
Yeah, so like Anike said, the red flag are always there. They are always there. But the problem is, one thing about all these Ponzi schemes is that a lot of people who invest in it actually know that it's leading them nowhere. The truth is everybody wants to go in faster and exit faster. But the danger in going in, the moment you go in, you get your first return, you become relaxed. You say, I don't even have money there again. Maybe it's the money they are paying me that I'm putting back. But and that is not true. That is not true. That's a big lie. That's what people used to console themselves that it is the same money they are paying, the returns. That's what I'm putting back. So, and it is something that you get neck deep into it unconsciously, and you won't know. That's one thing about Ponzi scheme. Like everybody has said, it's the red flag. Okay, who are the regulators? Are they regulated? Who check their books? That's like, and I think Barry mentioned that as well. So high return is a no-brainer. Is high risk. If the return is outrageous, you should know that they are just using. I'm paying. I collect money from Iberi. I pay Anike, and Rena is coming to collect her own, and I'm expecting more from. So it's just money being washed around, money being circulated within the same set of people. So, and again, who are the people behind this business? Are they reputable people as well? So these are the questions that we need to ask ourselves before we invest in any of these any business, any investments, so to speak.
Rena, yeah, thank you. If I see you're raising your hand, please can you, time is fast spent. Please, can you just send your question to the question box, and we'll see if you can answer. Rena, please.
Yeah. I mean, again, we're all sharp guys. So the first, we want to be the one that will quickly put our money and bring it out. If God forbid that to be my turn, it's not my turn that they will catch me. Do you understand? That's just the mentality that, don't worry, I know one guy that got his money out. And there's always one guy that got his money out, so that you put your, the way you put your own down, you get. Or like, going to be kind of, explain it perfectly, right? Because you now start rationalizing a lot of things. You get neck deep in it. Again, are they regulated? Do you get? Because the regulators, sometimes you might even feel like they aren't even too much. But what they do is that they have the interest of the investing public at heart. And so they check everything that we're doing to ensure that in fact, not just as an institution, but even the products that you say you are selling, that it is indeed, these are the underlying assets that they are, you get, we regulate everything. We do returns on a weekly basis to the Securities and Exchange Commission, right? And they ask questions, why this, why did you send this late? What the jams and those sorts of things. So we're highly regulated institutions. And then a lot of, as investors, for instance, or even asset managers in general, all these funds are with custodians. So it's not just the fact that you are regulated by SEC, it is that even the assets that you have bought, the monies don't sit in our hands, they sit with a custodian, right? Meaning that at every point in time, if anything were to happen to Zinvest, God forbid, not happen, just if anything were to happen to the asset manager, your money is still safe because your money is with a custodian. Do you see my point? Because there's so many checks that they put in place to ensure that the public is protected, right? But you would find that it's a very simple thing to check with these Ponzi schemes or these quack investing houses. Those are the kind of things to look out for. Yeah, thanks.
Thank you so much for answering my question. Thank you so much for being wonderful panelists. I've learned a lot today. Thank you, Ebere. Thank you, Anike. Thank you, Mr. Rotimi. Thank you, Brenna. Thank you, my participants. Today, I've learned that you should know what your appetite risk is before you go into investment. Try to learn what you're trying to invest in. For Ponzi, check if they are regulated by SEC, Security Exchange Commission, by CBN. Try to search the owner, the founder, what is this person into? What does he invest in? What are they doing? People that work there, like try to do a lot of investment. If you cannot find answers to this question, then the whole investment scheme is questionable. I've also learned about different asset classes, mutual funds, fixed assets, fixed income. You said, yes, fixed asset deposit, something like that. I've learned a lot, and I hope like my participants have learned a lot. Thank you all for coming. This is the end of this month's Millennial Hangout on investment opportunities for millennials. We hope to see you next month, where we'll be talking about another topic. We'll send out flyers. It was so wonderful meeting every one of you. Had a wonderful time. Thank you. And this is the end of today's program. Have a wonderful day.
Thank you, Eniola. Thanks for having us. And
thank you. Thanks,
Thank you,
Eniola. Thanks,
Eniola.
everyone.
Thank you
the
very
other
much.
one is Anike, Rotimi, Ebere. All right.
Thank you.
Yeah, thanks,
Bye.
Annika. Thanks, Ebere.
Bye.
Thank you.
Thanks.